Hello and welcome to this Diwali special edition of Commodity Champions. I'm Manisha Gupta. The commodity markets have lit up in anticipation of a solid demand going forward. The gold prices hit all-time highs in both global and Indian markets, followed by silver, which has outperformed metals, by the way, in 2024 till time. The highs came back on the factor such as fiscal instability, de-dollarization, geopolitical tensions. The only sector that hasn't done so well has been energy, where the prices have declined, with OPEC and IEA cutting forecasts for global demand for this year and the next. While the precious metals are outperforming, the industrial metals are a mixed bag, with the copper, aluminum, zinc performing well, but steel, nickel, iron ore are all down on an year-on-year basis. Today, we track all of these commodities and get a sense on where the prices can move in the year ahead. I am now joined by Kishore Narne. He's head of commodities and currencies at Motilal Oswal. Ajay, Kedia is director at Kedia Commodities. Also joining us are Pranav. He's VP at EBG Commodity and Currencies at JM Financial. And we have Hansen, head of commodities at Saxo Bank. Thank you, gentlemen, so much for joining us. All to you first. And it's all about the international markets when it comes to commodities. Going forward, it's going to be important to see on who the next U.S. president is, and that would be 10 days away from here. Would you say the commodities as a sector, especially gold, has factored that in?
Well, happy Diwali to everyone, and especially my 1,000 plus colleagues in Gurugram. Well, the market has priced in a lot, I think, at this point in time. We saw last week how the rally was driven by the worries that we might have a red sweep, basically that the Republicans will control both the White House and the Congress. That will obviously leave the road open for some of the policies to be implemented. And what strikes me with these are that they will all lead to higher debt. And that was really one of the reasons why we just recently saw both yields, the dollar rise, and gold rise at the same time. So for now, we're pricing in some uncertainty post the U.S. election. We may see some profit taking as the initial reaction, but I think overall, the reason why gold is up more than 30%, silver nearly 40%, the reasons behind that have not gone away, and I think they're going to stick around for a while, and that's why we maintain an overall long-term bullish view on these two metals.
All right, so well, the events will come and go, but the bullish view for a longer term in gold and silver prices just about continues. Kishore, what's your sense between gold and silver? What would you still look to buy? The last 1 year, the last 12 months have been very bullish. And I remember you telling us that a lakh rupees in silver is a matter of time rather. From here, are you more bullish? What kind of returns are you anticipating, especially for silver in the next 1 year?
Of course, we are bullish. We are more bullish after our initial target is now achieved. So you pretty well know that we have revised our targets to 1,25,000. So roughly it translates to around $42, $43 in dollar terms. So again, there are forecasts anywhere between $38 to $50 in the world floating now. So I don't deny that 50 is not possible. So there could be a possibility. So that will take us to around 1,48,000 in rupee terms. But having said that, the only uncertainty at this point of time is the U.S. election and how it's going to pan out. But despite that, that's where the gold can get its cues from. But I think silver will still continue to be an outperformer. So we are bullish on gold and silver both. Gold, anywhere, I think we have revised our targets to 28.50 on dollar terms. The most bullish case is around 3,000. But in silver, 42 to 43 is the base case scenario for us. And the bullish case probably around 47, 48.
And before we reach those kind of levels, are you anticipating a correction? If yes, then up to what levels?
I think corrections are the integral part of this rally. We have seen those corrections coming up, and at times it's very, very short-lived. And global liquidity is something which is causing these things, both in equity markets as well as in commodity markets. The corrections are nowadays, it's a matter of days. And by the time you realize, the markets are again back to all-time highs. So that's something, a very different phenomenon. I think corrections are possible. So yes, if you are a very long-term investor, or maybe you're looking at a year or plus or so in silver, probably any day which it's down by 5, 7, 8%, it's a good time to pick up silver. So it's part of it, but I don't think there'll be a sustained a quarter of correction or something like that. So it will be a mere days of volatility.
Oh, that is very well said, yes. Before you get a hang of what the markets are doing, they've changed yet again. Ajay, what is your sense? I remember when we started 2024 and you'd said 2024, 2400 gold is what you were looking at that point in time. 2400 is come and gone, and how? We are very close to 2800 now. Are you looking at a correction from these levels? Are you buying on dips, and what are your targets now for 2025?
See, Manisha, I think whatever the rally up till now we have seen has been already, we can say, the ecosystem or fundamentals where it continued being supportive since 2022. And I still prefer bullion has not rallied much what we were expecting as compared to equity market. Take example of S&P 500 versus GSE. And most of the time I rely on data of index which suggests commodity is still having a very good scope. But coming back on the rally, what we have seen in last 1 year period, that was a fabulous rally. We have never seen this type of movement, and the geopolitical tension. ETF buying is one of the newest thing we can say, because now everyone is running out of gold. We have to buy bullion, silver and everywhere. So I think, for 2025, we are bullish, but I think with a very short period rally, what we have seen, certain technical or we can say we need a very new reason that can give more support
prices further
higher. So I think prices would be more volatile in 2025 because with a given geopolitical tension that has discount, interest rate cut, already we have seen the rate which we were expecting 1.25 should be there from Fed, but now it's hardly 0.75, which is again a slightly pullback. So I think the volatility would be there. On best case, we would see prices moving towards 3,000, 3,050 or near to 3,100 level. But the second half is going to be a little bit corrective mode. Again, we may see level like $2,400 mark in international, whereas on domestic side, maybe because of this duty adjustment rupee, again prices should be near to 70 nearby. But coming on silver, I think the best indicator would be gold-silver ratio, which is currently around 81. This year, we have seen multiple of times ratio was around 90, but not at all holding. That clearly shows slowly and steadily silver will outperform gold. Okay. If we see longer-term perspective, I think the average could be near to 66, 68 nearby. That means silver has still gist. As of now, we are targeting $40 mark, but as we have came out with a report, we may see in next 2.5 years or 3 years, $70 mark should be the level because of clean energy demand, or demand perspective has totally changed in last 10 years scenario. So we are more bullish on silver rather than gold.
Whoa, okay, yes, we have read those reports of $50 an ounce and $100 an ounce of silver, but 70 yet again being talked about. All we spoke about gold, but I do want to get your sense on silver as well. How bullish are you in the next 1 year, 2 years, 3 years? Clearly, precious metals as a sector sees long-term structural bull runs. How are you treating this one?
Well, you almost need someone to go the other, take the other side of the trade. But unfortunately, I have to say I agree with the gentleman that's already commenting on silver. The outlook looks good. I would say the supply outlook remains fairly tight. The fact that we are, if you are an investor at gold at this point, you have to really feel that prepared to pay a record high price, in the assumption that someone is even prepared to pay an even higher price tomorrow. Silver, as we know, had peaked at $50 quite a while back, and that just from that perspective makes it, from an investment perspective, an easier investment to consider compared with gold. So with that in mind, I agree as well with the ratio coming down closer towards its longer-term average. And with that in mind, and also looking at 3,000 as a potential target for gold, then yes, we are looking at 40 plus for silver next year.
All right, very, very bullish targets coming in there. Pranav, what's your sense? How are you looking at gold and silver both? And if you had to spend your money, invest your money, tell your clients, how would you advise them putting their money between gold and silver?
What we have been currently at current prices, we have been advising clients to at least book 50% of the profits. Prices have already rallied from around, the cut that we had seen, duty cuts from those levels of 68, 69,000. It has now trading coming close to 78. Silver is, up 1 lakh. So we see a round of profit booking, year end is there. So we may see some profit booking in the international market also. So this is the right time. At least we should book 50% profit. And the corrections that again we see as a buying opportunity again it dips. If we look at the prices in the international market, gold $2,700, 2635. I don't think till these two supports are breached. These are crucial supports. Till these two are not breached, the bias is expected to remain positive. As my colleague said, that it can hit 2800, 2850. Yes, that is the possibility in the near term. And in silver too, we are bullish. Looking at prices targets is around $39, $40. In the Indian markets, we could see silver testing levels of 1,15,000, 1,20,000 levels as well in the coming year. But again, advised to buy at dips. If you considering adding in a portfolio and how we can allocate both gold and silver, I think 50-50 should be the right ratio.
Okay.
With buying silver in a staggered manner at dips and adding gold also at dips in a staggered manner.
All right. So there is no short call. Well, you could take some profits, but those would be buying opportunities very soon going forward. And all-time highs in case of gold and silver is what our experts are predicting for the next year as well. Well, gentlemen, stay on with us. We'll go for a very short break. We've spoken about gold and silver and how you should be treating them within your portfolio. But metals is yet another thing. And the kind of decline that we've seen in energy markets, how should you be trading with that? Holding them in your portfolio is something we'll discuss after this break.